Hey, good afternoon, guys. So here's another little, I guess, kind of update, I guess summary, whatever you want to call this, on Bitcoin. So look, on a shorter time frame, right? There's a few little moves that are still kind of playing themselves out. It's still part of the much bigger picture, and I guess bigger picture for me is still that triple top type of scenario. You've got obviously the two, whether it's a bullish or a bearish. You've got the two likely scenarios still left on the table, right? So big picture, not really much change. I don't see this running to 100K anytime soon. I think I'm just going to kind of highlight the obvious again, that in the grand scheme of things, we've had the halving, we've had 12 ETFs approved, we've got a price multiplier. What is the excuse not to already be at 100K? Right? Now, look, smaller time frame in terms of where we are, what we see, and what we can look in for. This goes back to the 5th of May, right? And I was talking about the kind of key levels, where the liquidity sits, where the drop off in the volume was, and why the move up was actually anticipated, there first, right? Now I'll come into the next couple of steps after that, but the longs and shorts of it was we come up into the level, right? Then obviously we start to reject away from the level. Now there was a couple of others there. I've just deleted these in terms of the line because they're no longer valid. I'd even say that the pause line is probably less valid now than obviously when I first kind of pushed this out there. So obviously talking about these couple of different key levels, actually I think we're back in the visitor section. Here we go, visitor section there. Yeah, so as you could see, right, these couple of key areas, smaller time frame, were we were aiming for that move down, right? So the orange was up here, this kind of peak, then ultimately the drop down. The pause level, this one here, the 6179-ish kind of region, right, was where you'd anticipate obviously the first major pause from there. Right? So the first one was the hiccup, second one was the pause level. Now what we're doing at the moment is we kind of range bound, kind of bigger picture. We've got a little bit of liquidity underneath this, which is why I call this kind of playing the game, right? Now, there's a couple of reasons for this kind of key level. I think if I was to look at what we're seeing right now, we've got a 4 hour stochastic um, still on its way down. Right? So I still see a kind of a down move, down play. But smaller time frame, pretty clearly we've had a nice little drop. We're going to see some kind of pullback. The pullback then followed by. So once we get kind of confirmation of the pullback level, you can start putting kind of projections on to the downside, right? But the first key area below a break of the pause line is actually this one here, right? Now, in a much bigger picture, right? And I'm not talking weekly or monthly. I'm talking about maybe this is just on the daily time frame, kind of outside of this. You have to keep note in terms of these forms, right? Now, this one obviously changes the character slightly there, but ultimately this one then brings it kind of back below this one as well as below this one, right? So, technically what we've seen there is kind of downtrend, right? So at the moment it's still, pretty much kind of sideways. There's no real kind of interest in action. There's no real interest in kind of moves or play. I'd like to see this play itself out before we get any real momentum, one way or the other. I still kind of feel that we could potentially see a UT type move, which could take us up and above, back into this kind of top level range before I think it starts to break down, kind of further, right? So part of the reason that I feel this is still pretty much the same, no real big change, no real, kind of momentum shift in the grand scheme of things, is I've talked about a couple of things, so I can't find this in this one. I've talked about the current, this one here, COT levels, right? Now, obviously, this is the leverage funds. This is the kind of the big boys, and I think the misconception for a lot of people is the big boys actually are BlackRock and this, that, and the other, and to a degree they are. However, these are asset managers, right? The ETFs all fall under the asset management classification. So, bigger picture, the leverage funds are still the guys selling to retail who are doing the buying. There's been reports, there's been interviews and so on where, some of these CEOs of the ETF management firms have actually said a lot of the inflows are pretty much made up of retail overall, right? So I guess the main message is just tread carefully, really, right? And this is all out in the public domain. This is all readily available. You can kind of see this as a situation, and this is obviously where we are right now. So just had an update on trading view. So yeah. So I guess look, bigger picture, not really that much change. Smaller time frame. I expect a pullback on this one, right? With another drop down. I think once we get below this pink pause level, then confirmation is kind of key. I think zoomed out a little bit more, so that's the 4 hour. Zoomed out on the daily. Where are we to on the daily? I think. Yeah, well, on the daily, we've got some kind of upward momentum, right? So I think kind of coming back to what I just said about the UTAT or the UT rather than the UTAD. Um, I I kind of get the feeling that we kind of go up small time frame, kind of down medium time frame, and still a little bit more up, kind of medium long term before we really tend to break down or break down. So I think for me, like I said, smaller time frame is just playing the game at the moment. It's a bit frustrating for people wanting to trade on a smaller time frame, but a bigger picture, just kind of stick with it. It's all part of the game, all part of your learning curve. All right. So anyway, I'll see you on the next stream. Thanks for watching this, guys, and hopefully I'll keep this one short. There we go.